So welcome back friends. So in continuation of what we have been doing in business income, now we'll go to R&D expenditure. So when we talk about R&D expenditure, so research and development expenditure can be broadly divided into two parts, where the research is undertaken by the assessee himself or he is contributing to abroad institutions. Alternatively, in the case of research undertaken by the assessee, it can be on in-house R&D, it can be also other than in-house R&D. In-house R&D is eligible for reduction at the rate of 150% under section 35 2AB, for which you need to satisfy certain conditions. So normal R&D, you can claim 100% reduction. That's the difference between 2AB and 35(1). So when you contribute to approved institutions, reductions are available under various sections like 35(1)(2), 35(1)(2)A, 35(1)(III), 35(2)AA, and also 35(CCC) and CCD. So all these sections earlier had a reduction ranging from 125% to 175%, but today all these sections are eligible for 150% except 35(1)(III) and section 35(1)(2)A, which are available only to the extent of 100% only. So let's first move into 35(1)(1) and 35(1)(4), where the research is undertaken by the assessee himself, not on in-house R&D. So as I said, this section will be available to the extent of 100%. 35(1)(1) deals with revenue expenditure, 35(1)(4) deals with the capital expenditure. Capital expenditure can also be divided further into after the commencement of business, before commencement of business. Revenue expenditure can also be split into before commencement and after commencement. But when it comes to question of capital expenditure, there is no difference between before commencement or after commencement. Any capital expenditure other than land will be allowed as reduction. So when it comes to question of revenue expenditure, we have to be careful. So revenue expenditure can be divided into before commencement, after commencement. Before commencement, you can claim only two deductions. One is for research material and other one is for salaries and wages. And even in the case of salaries and wages, which will not include perquisites. So when it comes to question of after commencement, no problem. Any revenue expenditure will be allowed as reduction. So let's try to understand for a minute what could be the objective of this particular section. So I do a research. The research could be a success or a failure. If the research fails, the assessee will not be in a position to claim capital expenditure as a deduction, because if these assets cannot be used in his regular business, or if he closes on account of research failure, he loses the benefit. So therefore the government says we will give you a reduction 100% on your capital expenditure, so that the encouragement can be given for R&D activity. So, but however, normally if I purchase a capital asset like plant and machinery, I am entitled to claim depreciation. Depreciation under the provisions of Income Tax Act, in the event of loss, can be carried for any number of years and can be set off against any head of income. So therefore, even in the case of R&D, section 35(4) provides one very interesting point. As you can see from the title itself, treatment of unabsorbed capital expenditure on scientific research. What does it mean? My income is 10 lakhs, whereas I have incurred capital expenditure on scientific research is 20 lakhs. So that means, though I am eligible to claim 20 lakhs, my income is available only to the extent of 10 lakhs. Therefore, there is going to be a loss of 10. If this loss is treated as a business loss, I can carry forward money for a period of 8 years instead of 1 day with business income. If the same is treated like a depreciation, then I will be in a position to carry forward any number of years and set off against any head of income except salaries. That is what is facilitated by 35 subsection 4. How will 35(4) will apply? If the income is not sufficient to absorb the capital expenditure. So my capital expenditure is 20, my income is only 10, that means I am not able to adjust the capital expenditure in full. So that 10 we call it the unabsorbed. Just move on. So what will be the tax treatment? The unabsorbed amount, in our example 10, you can carry forward for any number of years, and in the subsequent years also you can set off against any head of income except salaries. So it's a very important advantage that the government gives for capex on R&D. So let's move on to, before we go to take a small illustration for the same. So income before 3500 lakhs, revenue expenditure 80, capital expenditure 70. So now your business income comes to 100 minus 80 minus 70, loss of 50 lakhs. So is this loss a business loss? If yes, I can carry forward money for a period of 8 years. But look at my capital expenditure, it is 70 lakhs. So therefore what the government says, any loss up to 70, we will treat it as an unabsorbed capital expenditure on scientific research. This you can carry forward for any number of years without any time restriction, and you can set off against any head of income except salaries. So that is the impact of 35 subsection 4 which I have highlighted here. You can carry forward for any number of years, set off against any head of income. So now we will move on further. So what if this R&D asset is subsequently sold? So now as you would have recalled, so you can try to recall this particular point, entire capital expenditure is going to be allowed. That means if I buy a research equipment for 100 lakhs, my deduction under section 35 is also 100 lakhs. So that means for tax purposes the value is 0. So if I am going to sell this asset, the entire sale will be taken as a profit. Right? So entire sale becomes a profit. Now whether that profit is it a capital gains or a business income, because under income tax act any sale of a capital asset is treated as a capital gains, and this is only a capital asset. But however, I am allowed a deduction to the extent of 100 lakhs in the business income. Any profit up to 100 lakhs, is it not logical to take it as a business income? That is the only question. Now to do this, there must be a specific provision in the income tax act. Is it there? Yes, which is 41 subsection 3. If the asset used for the purpose of scientific research is sold without putting the same to any other use, I have shown it in red, very important part, 41.3 will apply only if the sale happens without putting into any other use. So if I use it in business before sale, this section will not apply. So I should sell without putting the any use. If that be the case, entire sale consideration. Don't think that how can they tax the entire sale consideration? Visualize once again what we discussed already. Cost 100, deduction 100, value for tax purpose 0. That means even if I sell for 1 rupee, the entire 1 rupee is a profit. So therefore when I say sale consideration, the sale consideration has to be the profit or deduction allowed under section 35. So if I am allowed deduction to the extent of 100, any profit up to 100, let's say I am selling for 80 lakhs. 80 lakhs is the business income. If I sell for 90 lakhs is the business income. If I sell for 110, 110 is not going to be business income, because I was allowed deduction only to the extent of 100 lakhs in business income. Therefore, to the extent of 100 lakhs will be considered as business income. Balance 10 lakhs will be considered, which is 110 minus 100, will be considered as a capital gains. Now this capital gains will be short term or long term depending on holding period. So a lot of students confuse here. They think it's a depreciable asset, therefore it will be always short term. Depreciable asset and income tax act means an asset on which depreciation has been claimed under section 32(1)(2) under WDB method of block of assets. So then only it will be considered as short term. Otherwise it's considered only as long term only. That's what I mentioned here. Sale over and above cost subject to indexation. If it is long term, will be considered as a capital gains. So now we'll move on to in-house R&D. As I said, the fundamental difference between 35 and 35 2AB. 35(1) is available for 100%. 2AB is available for 150%. So expenditure eligible for deduction, all revenue expenditures you can claim, and all capital expenditure except land or building. Just recall 35(1)(4) for a minute. Under 35(1)(4), I am eligible to claim deduction for any capital expenditure except land. Whereas here, I will be in a position to claim deduction for any capital expenditure except land and building. So what will happen to the cost of the building? Cost of the building, you can claim deduction under 35(1)(4), but the moment you go to 35(1)(4), you can only claim 100%. That is the one point you should understand. So land not eligible under both the sections, building eligible only under 35(1)(4), other capital expenditures eligible under 2AB. So what are the conditions? So because there should be some conditions, because here I am going to get 150%. The assessee must be a company. 35(1) assessee can be any person, can be an individual, can be a partnership, but to claim 2AB, assessee must be a company. Second condition, the assessee must be engaged in the business of biotechnology or any business of manufacture or production of any article other than articles which are listed in the 11th schedule. So 11th schedule is basically a non-priority items. So go to the list of 11th schedule. So there are certain items are listed which according to the government is not the priority for manufacture. So they don't want to give extra 150% benefit. See, one of the items there is wine and beer. The government feels correctly also, in my view, that why should a research be done in that particular business and for which the government should give an extra benefit of 50%. So that's why they have listed items in the 11th schedule which is not eligible for a weighted deduction. The in-house R&D facility should be as spread by the prescribed authority, Department of Scientific and Industrial Research or DSIR is a nodal agency, so they have to approve the facility. The company should also enter into agreement with that authority in cooperation of audit and accounts because they are giving 150% action, they want to put this restriction. So we discussed in 35.4, the unabsorbed capital expenditure will be treated like a depreciation. The provisions of 35.4 does not include 35.2AB. So therefore, any loss which arises on account of capital expenditure under 35.2AB will be treated only as a business loss. That means you can carry forward only for a period of 8 years. One easy way of remembering this, there is no distinction between revenue and capital in 35.2A. Whereas if you look at 35.11 deals with revenue, 35.14 deals with capital, two different clauses deal with the same. Whereas in the case of 2AB, you don't find any distinction being drawn between revenue capital. That's a very important point to appreciate when there is a provision. Further, you can claim deduction under 35.2AB from the date on which you established the facility, not from the date on which you got the approval from the prescribed authority. Now similarly, 41.3 also does not have 35.2AB. So therefore the profit will be treated not as a business profits. That's a very interesting point as a comparison between 2AB and 35.1. So some key issues in 2AB. Can you claim deduction for intangible assets? So whether you can claim 2AB for outsourced manpower costs and consultants. So these are some of the guidelines. I'll just leave it so we can just go through this revised guidelines. So they have given some guidelines from the examination part of it. This may not be that important. So if I skip the slides and move to contribution to approved institutions. So contribution to approved institutions. So company. So that's the first one is any contribution to a company or any contribution to any institution that triple SR is social science or statistical research. So triple SR is nothing but, don't confuse us, what is that there? Social science or scientific research. So for example, so many times so a lot of people will come back and ask you one very tricky question. The question you will be sometimes amused. So how many times you brush your teeth? So you will be wondering, why brush your teeth? What does it mean? So so then suddenly they will come by in an airport. Somebody will pull you. Just give one glass of cold water. Then they will put one small paste. Come back and say this paste goes deep into your in that. Today you are entered, then within 2 months your pulp becomes so strong like this. So first step there is they take a study of how many people experience whenever they drink a hot or cold water. Other research. What is a social statistical research? Based on that, the companies may develop a product through this thing for which they may do a research, develop a product to counter that. But first step is the social side. How many times, like how many of you have a dandruff? So many questions, they ask this question. So a lot of television channels will put a question. Our channel is the #1 channel. And they will put one study done by this, that company and all. So therefore that is basically a social science and statistical research. If you donate to such institutions and to a company for R&D, you will get only 100% now. If you contribute to agricultural extension project or skill development project, you will get under 35 triple C and CCT 150%. Now, if you contribute to a natural science, to any school, university, college which undertakes research in natural science, you will get 150% under 35 what double I. And if you contribute to IIT or national laboratory for approved programs, the difference between these two, even IIT will come under 35 1 double A also. But if it is for any specific approved programs, you come under 2 AA. If you go there under any, it's not under specific programs, you get 150. The only question also is, can I claim both 150 and 150? The answer is no. The section makes it very clear. If you claim 2 AA, you cannot claim any other provision. If you claim 2 AB, you cannot claim any other provisions. So both 2AA and 2AB specifically provide that you are not eligible to claim deduction under any provisions of the Act. So some small, just a quick recap, we'll have some few questions. So S Limited purchased plant and machinery on 1/4/2018 for 10 lakhs 12% per annum. The plant and machinery is put to use on 1st October 2019. How will you treat the interest for tax purposes? 18-19 I paid interest, 19-20 also paid 12% interest. 1st October 2019 they are supposed to put to use. So you have to be slightly careful with this particular question. So essentially the equation is 120 of interest paid in 18-19. Again you have interest paid for the first 6 months 60. We have already discussed in the 3613. Any interest on capital borrowed till the asset is put to use has to be 1T capitalized. So therefore that 120 for 18-19 plus 60 of current year 19-20 should be added to the cost of 10 lakhs and you are eligible only to claim depreciation. So when they apply depreciation, many students make a very simple but very silly mistake in the examination, because many of them think you will get full depreciation if the asset is put to use up to 30 September, half depreciation up to 1st of October. 30 September is 6 months, but law does not say you should put the asset to use for 6 months. It only talks about you should put to use for 180 days. 180 days and 6 months are not the same. For assessment in 2021, because it being a leap year, from 4th October it will be 180. So therefore put that cut-off date, 5th October alone you will have half depreciation. So it is not 30th September, fix the correct cut-off. So many people make a simple mistake in this particular problem. So similarly, as you can see from the first line, S Limited is engaged in the business of biotechnology. Biotechnology company nale 35 to 80. Straight away you should capture the equation. Your imagination should go to that extent where as soon as you see the first line, you should know that it's going to be on 2AB. So as you can find out, this on in-house R&D approved by the prescribed authority, blah blah blah. So which automatically gives you signal that is 2AB 35-1-4 combination. Purchase of land 20 lakhs. Both land will not be eligible under 35-1-4 and also under 35-2AB. Cost of construction on the above land 30 lakhs. Not eligible at 2AB, but you can claim under 35-1-4. But once you go to 35-1-4, 100% only. These two you can claim deduction to the extent of 150%, 19 to 150%, 135. 2AB 135, this is not eligible. 30 under 35-1-4, totally you will get 165 as a reduction. So right friends, with that we will conclude this series. So we'll continue business income in our next video.